How to improve high credit card score in 2022. When you have a good credit score, you can get better terms and lower interest rates on loan products and credit cards. But it's not always easy to just boost your credit score overnight. First, you need to consider why your score is low. Understanding the specific circumstances as to what is impacting your score is your first step in understanding how to quickly increase your credit score. In this video, we provide important tips to build high credit score in 2022. 1. Don't miss payments. Your payment history is one of the most important factors in determining your credit scores. And having a long history of on-time payments can help you achieve excellent credit scores. To do this, you'll need to make sure you don't miss loan or credit card payments by more than 29 days. Payments that are at least 30 days late can be reported to the credit bureaus and hurt your credit scores. Setting up automatic payments for the minimum amount due can help you avoid missing a payment, as long as you're careful not to overdraft your bank account. If you're having trouble affording a bill, reach out to your credit card issuer right away to try and discuss hardship options. Before move on to the next step, if you found value on this video, please like and subscribe for more videos like this. 2. Check your credit report for errors. One way to quickly increase your credit score is to review your credit report for any errors that could be negatively impacting you. Your score may increase if you are able to dispute them and have them removed. About 25% of Americans have an error on their credit reports, so it's important to take the time to review. Some common errors to look out for include fraudulent or duplicated accounts, as well as misreported payments. 3. Reduce your credit utilization ratio. Several factors determine your credit score. Your credit utilization ratio is an influential metric because it is part of a factor that makes up 30% of your score. Credit utilization is simply how much credit you are using divided by the total amount of credit you have access to. If you charge $10,000 to your credit cards and your total credit limit is $50,000, your utilization is 20%. Credit bureaus use your statement balance in this calculation. So you have utilization even if you pay off your balances in full each month. A general rule of thumb is to use up to a maximum of 30% of your credit card limit. Many experts suggest keeping it below 10% if possible. Most credit cards report your credit utilization once a month to the credit bureaus. In many cases, your most recent statement balance is the number that goes onto your credit report. 4. Request credit limit increases. You can increase your credit limit one of two ways. Either ask for an increase on your current credit card or open a new card. By increasing your credit limit, you lower your utilization. As long as you're not maxing out your card each month. Before asking for a credit limit increase, make sure you won't be tempted to spend more than you can afford to pay off. If you are considering opening a new credit card, do your research beforehand. How often you apply for and open new accounts gets factored into your credit score. Each application requires the card issuer or lender to pull your credit report, which results in a hard inquiry on your report and dings your credit score a few points. Usually the negative impact of those factors is much less than the benefit to your score of reducing your credit utilization ratio. Just make sure you don't apply to too many credit cards over a short amount of time and send a red flag to issuers. 5. Have a variety of credit accounts. While you should only borrow money when necessary, having a variety of credit accounts can demonstrate you can manage credit responsibly. You might have one credit card, a home mortgage, and a car loan. Each type of account can benefit your credit score differently. Loans that you repay in full can remain on your credit report for up to 10 years. You can have an easier time qualifying for a similar loan in addition to having a higher credit score. If you like this video, please subscribe and turn on all bell notification for future updates. Thank you for watching.